What is going on, traders? Welcome back to the Traveling Trader. Good to see you guys again. In this video, we will be talking about NIO and how to trade NIO leading up to NIO Day, which is January 9th. Now, this is a Saturday, so remember that. That means that almost certainly we won't see a rally on that day. But all kidding aside, what could we expect from NIO this week and beyond? So in the first part of the video, I will be giving you fundamental analysis and news, and then I will go into the technicals and show you why the technicals actually match up to what the fundamentals say. And then I will be giving you my NIO stock and options trade ideas, so you definitely will want to stick around till the end. God damn, that EP9 behind me, that is so sexy. They need to go ahead and bring that to the US stat. Or William Lee, just send me one. I'll test drive it for you, and I promise I'll give it back. Promise. But if you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know how you are trading NIO, and if you already have NIO, what your cost basis is. And if you have any questions on any of the options or stock strategies that I talk about in this video, also leave that below. I try and respond to every comment. And if you want access to our wonderful trading group, link is in the description below. One more thing before we get started, you will see in the pinned comments below a link to sign up for the options trading course that I'm releasing. I'm almost done with it. You will get early bird access as well as a lucrative discount if you are on that list. It is a full options trading course. I spent hours recording it. It is going to be options from A to Z. So if you are interested in learning options from yours truly, link is in the pinned comments below. Without further ado, let's get right into it. NIO stock, should you buy NIO leading up to NIO Day? Okay, so here is what we already know. And it's important to get out of the way what we already know because this is called known information that is usually priced in. So if you're a fan of this channel, you know that I've discussed how to trade Tesla before a number of binary events, whether that's earnings, stock split, battery day, etc. And so far, we've been right on all of them, including the S&P inclusion, where I said we will see a drop-off after S&P inclusion, and then it will gradually start to rally and become more valuable than it was before S&P inclusion. So with that said, this is no different, right? If information is known, it is already priced in. It is the new information that starts driving the price. And a few of these key pieces of information that I talk about actually came out on the weekend. So Monday, which is tomorrow from the date of this recording, in my view, we will see a price hike. Now, let us get into the information that is known. On NIO Day, January 9th, NIO is going to be announcing its first sedan. Right now, NIO is known as an SUV company primarily, even though they did release a sports car like the one that I showed you here, this EP9, although that is a concept car, it's not a production car. However, they are going to be announcing a first sedan. Now, what is not known about this is the pricing. So in my view, if NIO can get to pricing that is competitive with Tesla or even cheaper pricing than the Tesla sedans, then we will likely see a rally based off of that information because it is not known. We don't have much information on how NIO is going to be pricing that sedan. NIO already stated that they will be mass manufacturing the sedan by the fourth quarter of 2021. They are also expecting to make an announcement about some battery advancements. They are expected to announce a 150 kilowatt battery pack that will likely increase the range of its EVs to 900 kilometers. For my American friends, it's around 560 miles, which is insane. That battery pack is compatible with all existing NIO models. And if you are a fan of NIO, you already know that they have swappable batteries. I don't know if that's actually in every single vehicle they've made. It could be, but most of their newer vehicles have swappable batteries, meaning you can remove the battery and insert this new battery pack. They are also expected to make an announcement about their autonomous driving software. Now, the details of this we don't know. So for instance, if on NIO Day they announce that the autonomous driving software is actually at a further level than expected, then we could see another increase in the stock price. And they'll also be giving an update about their BaaS service, or battery as a service, which I think is a genius idea. And I think more EVs in the US probably need to adopt a similar service offering. See, right now in the US, for instance, you have Tesla superchargers all over the map, which is great. But if you don't have a Tesla, you can't use that. Imagine a US company that's creating an EV like GM, for instance, as opposed to creating a supercharger system that tries to rival Tesla's. What if they had a battery as a service and they had battery service swapping stations as opposed to superchargers, or both? I am surprised that more US companies haven't looked at this yet. Okay, so that is what we know so far about NIO Day. Here are some other pieces of fundamental analysis that are relevant to why I think NIO stock price is going to do well this week and beyond. The battery as a service subscription that we talked about, BaaS subscription has gone up 35% from November to December. Now, this is known information, but again, if new numbers come out on NIO Day about battery as a service, then that will likely give a boost to the stock price as well. But in terms of the trajectory of the company, it is moving in the right direction. All of its service offerings and products are trending upwards right now, right? And it looks like a company in its infancy that is making big moves. Another thing that we might get an update on that is not known information is the details of their expansion to Europe. Now, we've heard about this, so it's not completely new, but in terms of the details of how they're going to be expanding into Europe, the pricing, what countries are going to be expanding to, if we get more details on that, again, that is going to be another catalyst that might boost the stock price as well, because that information is not fully known. We only know about the general info and not the details, and the details could uncover aggressive and confidence boosting plans. Now, here's some news that came out over the New Year's holiday. 200th NIO store open ahead of first NIO sedan launch next month. Again, we're talking about trajectory, right? When we're talking about stock price, investors are buying the stock based on where they think the company is going to be. I mean, just look at Tesla, right? It's $700 a share. It definitely can't justify that price level based on what it's doing now. People are baking in what they foresee the company doing in the future and the amount of market share that that company will have. Same thing for NIO. I'm not saying NIO is Tesla. Please, guys, don't get butthurt. I'm saying that there is a trajectory that the company is clearly headed in, and that trajectory is upward trending, which is what you want to see as an investor. Now, there was some rumor that we might get 2 sedans announced during NIO Day as opposed to just the one. But again, with these sedans, I think the major catalyst will be price. So if it comes out and it's priced way above, say, like a Model S, then I don't think that will really bode well for the company's first sedan launch, but I highly doubt that will be the case. Okay, now we get into some of the more juicy stuff that was released over the weekend that has not hit the stock price yet. So if you did buy the dip on NIO, I think you will be happy on Monday. NIO's deliveries spiked 121% in December. Why is this important? Well, November was actually a very slow month, and it was looking like they would not hit their targets for end of year, and they needed a record-breaking month in December in order to meet or break their targets, and they did that. 121% spike in December made up for the slow month of November, and it beat their guidance of 16,500 to 17,000 units for the fourth quarter. They delivered a total of 17,353 vehicles, 111% year-over-year increase. Again, what you want to see from companies in their infancy, regardless of whether we're talking about EVs or any other service offering, right? Companies in their infancy that had struggled with generating cash, that finally got that cash boost and then did something with it in order to beat expectations and continue to generate year-over-year increases. This is exactly what you want to see. In the entire 2020, the company delivered 43,728 vehicles. That is crazy. For us early NIO investors, we remember days when they were delivering cars in the hundreds. And although that was seen as positive news, it wasn't enough if they did not generate more growth and just burned through their cash. And this is what the 2020 looks like, which is insane. Just exponential growth even through a pandemic. And one last thing, let us not forget about Goldman Sachs upgrade back in December. They upgraded the stock to $59. And as I've always said, with these hyper growth companies, they almost always hit those targets, especially if the target is not ridiculous and is within reach, right? It's not like they're expecting a $400 price target, but going from where it's at currently, and we'll talk about price in a second, from $48 to $59, that is a very realistic price target. I mean, we were already at almost $58 just back in November. All right, now that we got some of the fundamentals out of the way, and like I said, some of those fundamentals came out during the holiday period and they have not yet hit the stock price. So I do expect this week the stock price to keep going up. Now let us talk about the technicals and then I will tell you how to trade NIO going forward using stocks and options. So let's look at the chart. If you're not new to this channel, you know that I always talk about if buying at the major moving averages if you are interested in investing in a company that you believe in. And NIO was at a 32% discount, and December 14th, it was sitting at the 50-day moving average. And if you're part of our trading group, then you would have already known that in terms of an investment, this is an opportunity. It was below $40. It was $39.50. Now, this happened to coincide at a time when NIO did a share offering. Smart. They're very smart to do that. Companies will do that once they reach a growth peak in their stock price because they know that there's a lot of momentum from traders and investors. And so they offer up more shares to try to raise more money for future operations. As I said before, it is sometimes seen negatively, but it is not a negative thing when a company is in its infancy and it clearly has an upward trajectory and it's trying to grow. That is how you raise money. That is the whole point of being a public company, is to issue shares to the public. So because of that, we saw a price drop, along with, at this time, there was some Chinese stock fears regarding Alibaba and some other Chinese stocks that were more closely tied to government and defense. So the offering, along with those fears, gave us a nice price drop. And I said that this was a buy the fear sort of situation. When people are selling here and we have a 32% discount on NIO, if you still believe in the company, this is when you want to buy. There's a famous quote by an investor. I can't remember who said it, if it was Peter Lynch or somebody, but the stock market is the only place where if there's a sale, people don't line up. So if I told you that PS5s were 32% discounted and they're available at Walmart, there'd be a line out the door. But when it comes to investing, when we see a price drop, people get scared. And those long-term investors who want to own the company know that that is a buying opportunity and they don't care about the short term. They see a discount and they take it. Now, if you don't believe in the company, that's a different story. Anyway, but the good news here is that although there was a 32% drop, this is actually a very tight range. Now, when other Chinese stocks were tanking, NIO was actually gradually rising from that $39.50 level, and we are back up now at $49, right? And this is a very tight range. This is a continuation pattern. You want to see this at the top of an uptrend because it gives the stock another chance to blow higher at the breakout. So these continuation patterns from uptrends, you normally expect to see a breakout to the upside unless something drastic happens to the market and or the company itself. The accumulation distribution line here on the bottom shows a continuous upward trend, telling us that investors and traders are willing to buy this as the stock continues to incline, right? This is a sign of bullishness here. We don't see any drop off in the accumulation distribution line, even as NIO was consolidating up here at the top. So how should you trade this going forward? In my view, if you are just a stock trader and not an options trader, you have no clue about options, although you should, you will continue to dollar cost average here, trying to wait for the absolute bottom, which is how a lot of people missed this right here, right? This 39.50. Trying to wait for the absolute bottom is an exercise in futility. You might hit it 1 out of 20 times, but that is just luck. That is not a process. That is not a strategy. So in my view, if you miss this bottom, you will continue to dollar cost average here. I do think NIO in the short to midterm will hit that $59 price target. And for the end of 2021, I do see a $75 to $100 price target, especially based on the trajectory that it's going. It's obvious. It hasn't even delved into the European market yet. It hasn't even released its sedans yet. And if you don't know how to look at a chart, you can get a free trading view account. So I would get a free trading view account. I would add the moving averages on my chart. It's the 50, 100, and 200 moving averages, and learn to spot these, right? I mean, you don't have to know about patterns cover to cover to know that the price is sitting at a major moving average. So in my view, I do think we'll see a run up to NIO Day and stock traders can continue to dollar cost average here. My opinion, do your own research, do what suits your risk tolerance. Now, if you're an options trader, things are obviously easier because you don't need the stock to go up for you to make money. There are so many strategies we can utilize here. Now, again, I'm releasing my options course. It's going to be a full A to Z. I'm going to be describing iron condors and diagonals and calendars, vertical spreads, how I generate weekly income from options. Hint, hint, it's not by buying calls. Anyway, the link is in the pinned comment. So sign up for early bird access. So this is how I would play it with options. The first strategy I'm going to be using is called a diagonal spread, and we can essentially double our money doing this. Here's how it will look. A a diagonal spread, a long call diagonal spread, is a slightly bullish bias. And the reason that we do it is because they are relatively cheap. And if the stock price moves towards your target, you can essentially double your money or more. So here's how I would set it up. I would look to, let's just say January 15th. So NIO Day is January 9th. So I am expecting a run up, a gradual run up leading up to NIO Day. And then depending on what they announce there, because again, it is a Saturday, we could see a run up in the week following, which would put us at around the January 15th expiration. So in this case, I would sell the 55 call and I would go to a further out expiration because this is a diagonal. So it has two different expirations and two different strike prices. So I'd go out to, let's just say February 19th. That should give us a pretty cheap call out of the money, and we can buy the 60 call. And you could see here that in Thinkorswim, it clearly identifies it as a diagonal, which is what it is. So here is the play. I'm selling the 55 January 15th call, and I'm buying the February 19th 60 call. And this is only costing me $1.74 or $174 per contract. Now let us analyze this. Right click, go to analyze trade. Obviously, if you have Robinhood, you can't do this, but you can do it in like options profit calculator, for instance, which is free. So here's how it looks. There is a slightly bullish bias because this right here represents our short call. So the peak of this will be at around $55 at expiration of the short call, which is January 15th. So right now, NIO is trading at 48 and change, almost $49. So if we're expecting it to gradually move towards this $55 mark, I want you to pay attention to the blue here and see what our profit would be if it expires at the peak, which is January 15th. And around $55, we are making almost $400, a little over $400 with an investment of $174, and that's $400 profit. So that would, in terms of percentage, that would mean almost 130% gain. And I really love this strategy because if NIO does see an unexpected decline, we are protected here on the downside, right? There isn't much that we can lose here. The max we can lose is our investment, 174. That's it. So it's a fairly cheap spread, in this case a diagonal spread, that will allow us to benefit from a gradual upward move on NIO and potentially double our money if we can get close to that $55 range. Now, another strategy you could do, I've talked about this before, is a leap call. If you are ultra bullish on NIO, although I like to buy calls when the stock price has a down day, and as we know, NIO has had a major down day. Like if you bought a leap here at around the $40 mark, oh my God, you would be sitting pretty right now. But it doesn't invalidate the fact that you can actually buy a leap call if you really believe that the company in 1 to 3 years will be significantly higher than it is today. So you could buy a leap. You can go out to either January 2022 or January 2023. And by the way, I'll link the video to the leap call here, but it is generally a long-term call option with a fancy name. That's all it is. And you generally want to find a call that has at least a 0.8 delta because you want to take advantage of most of the stock's move. And a 0.8 delta just means that if the stock goes up by $1, this call option will go up by 80 cents. So it's moving, it's capturing 80% of the move of the stock with a minimal investment, because a call option, if you buy one, allows you to control 100 shares, right? If you wanted to buy 100 shares of NIO now, it would cost you $48.74 based on this price right now, $48.74. To buy, let's just say, this leap call with the 80 delta at the 30, it's a 37 strike price, expiring January 2023, it's only going to cost you half of that. It's going to cost you $2,700. And you're capturing 80% of the stock's move for a 50% discount in capital commitment. So you could just go ahead and buy this leap call at $2,785. Now, obviously, there are no free lunches. If NIO's stock price does go down, this call will be worth less. If NIO's stock goes up, this call will be worth more. So it does follow the stock price. It's not like you can buy this and just sit there without losing money. Of course, if NIO's stock retraces, or when it does retrace from now until 2023, you will also see the options price decline. But the goal here is to capture a long-term upward move on a company that preferably is in its infancy, that you think will be worth multiples of what it's worth today. All right, what other things can we do that are lucrative in the short term? Well, let's see what NIO puts go for, because we could sell a cash secured put, something I also did another video on. So let's see if we go out to March, what the puts give us in terms of premium. Well, in this case, you would only do this if you wanted to own NIO shares, but you could sell, for instance, a $45 put that expires March 19th for $730. If NIO doesn't hit 45 bucks by March 19th, like if it doesn't retrace back down to 45, you get to keep this entire amount, $730, no questions asked. If NIO hits $45 and you get assigned the put, i.e. you get put the shares, you'll be forced to buy 100 shares of NIO, but your cost basis won't be $45. You already got paid $730 for the put. So your cost basis would be $45 minus $730, which is what, $37.70. So if you are bullish on NIO, wouldn't you relish the opportunity to buy it at $37.70? Of course, if NIO dropped to 37 bucks and you are bullish on NIO, then I would surmise that you would be a buyer of NIO. In this case, you could sell the put. If NIO never hits 45, you get to keep this money, $730, no questions asked. You could sell another put then. If NIO does hit 45 bucks or below, you are put NIO shares at a cost basis of $37.70. One last thing you can do is you could sell a call spread after the run-up. So in this case, you wouldn't do anything here. You would wait for the run-up. And we're talking about options. Obviously, if you were expecting the stock to run up and you want to buy the stock, you'd buy the stock. Just in terms of options, you would essentially wait for the run-up, wait for NIO Day and all that stuff, wait until the price is pumped, and when it's at a peak, or when you think it is at a peak, when it has found some resistance, you can then go in here and sell a call spread, because the value of calls will be more inflated. So you'd wait for NIO Day, wait for the peak, and you could go out to something like February and you could sell a call spread at the top, and all of these calls will be inflated in price if the price does go up. So let's just hypothetically say that NIO now is 55 bucks and you think that it's hit a wall. Well, you could sell the 55.60 call spread, which is technically a bearish position, and right now you can get $117 for every contract. But if NIO's price does go up, you would get a lot more than this, right? So in this case, you would sell the lower strike and you would buy the higher strike call. That is how you set up a vertical call spread. I'm giving you a lot of gems. Obviously, all of this will be covered in my options course. These are just some ideas on how to trade NIO leading up to and after NIO Day. I hope you enjoyed this video. I hope it gave you a ton of good information, or maybe even just a little bit. If it did just a little bit, go ahead and leave it a like. Subscribe to the channel if you haven't already. Road to 100K. Hit that notification bell. Sign up if you want access to our trading group where I send out plays like this every day. Stay safe out there, traders. Peace.